Okay, so here's what I want to go over. Kind of the current situation, talk about some of the global issues, and then dive in, look at U.S. trade, what we're looking at in the pork world, and then move over and talk about some of the wild cards as we move into the future. Now this next slide shows global pork production. I think this is a good reference point as we start talking about the global situation. You can see there roughly half of the pork in the world is produced in China. And therefore, as we look at global forecasts, any numbers, China weighs so heavily on these numbers, and unfortunately the data is so poor that it really makes it difficult to try and put meaningful analysis together on a global basis. If we look there, you can see the U.S. is 10% of global pork production. U.S. represents about 33% of global pork trade. Brazil there, 3% of production, roughly 10% of global pork trade. This data here is from USDA, and they've got global consumption estimates out to 2019. I think that's interesting. I know if you talk to them, they would probably tell you they're going to be wrong, and nobody knows where we're going to be in 2019. But I think this is interesting to look at from a U.S. pork production standpoint, at how much more pork is going to be needed in just 9 years. You can see there 23% increase from 2009 or 2010 out to 2019. That's a significant need for more pork. Again, think back that China is half the pork in the world, and the bulk of that consumption growth will be in China. Now that doesn't mean that the rest of the world isn't going to be able to participate in that. China currently imports roughly 2 million tons a year if you include variety meats and pork as well. And that's become a significant piece of the U.S. sector and will continue to grow in the future. When we think about global meat consumption and the key drivers, the biggest driver that I've found is per capita income. And this next chart shows meat consumption and per capita income by country. Each of those red dots is a separate country. And the bottom scale, the horizontal scale, is a log scale just to space those countries out to where we can see them. But what this chart indicates is that countries with higher incomes eat more meat. This is beef, pork, and poultry included. You can see the U.S. right up there at the top. Some people are surprised to see Japan so low, but this chart does not include seafood. If we put seafood on there, Japan would be almost right next to the U.S. But the assumption, the hypothesis I have, is that as we see these incomes grow around the world, these countries will migrate upwards and to the right, which is a huge variable when you consider the population mass, especially between the 1,000 and 10,000 per capita income group, that group where China is. As we see the developing world continue to expand in incomes and move into a more developed situation, the diet changes significantly as consumers move from rice and beans type of diet into a vegetables, protein, oils type of diet. And I think that's the gravity that's really going to influence what we're able to do globally in pork production, both in the U.S. and virtually everywhere on the world that can produce pork today. A shift forward here as we think about those incomes, this is a chart showing the annual growth rates in per capita income around the world. And I've just picked a selected group of countries there that are key to us and relate to us in the pork sector. Of course, China's been averaging 8 to 10% per capita income growth now for 10 years. You can also see the big decline during the global recession in 2009 and see that it was really the developed countries, U.S., Japan, Canada, those kind of countries that got hurt the worst in this economic debacle. The developing world fared much better. In terms of what we're expecting into 2011, you can see there the key markets we export to are Japan, Canada, Mexico, Korea. Those are the slowest growth countries. They're the more developed countries. Now, I don't see it as a problem looking at income growth because for the developed world, we're going to be right there along historical growth rates moving into 2011. I think that'll be very beneficial to continue to support the growth we've seen recently into those markets. Developing world's going to grow faster, which is also good news for us. I found this next chart. This data is from the United Nations Food and Agriculture Organization, and they've put together some global meat price indices. And these aren't perfect. I mean, they're a small group of countries, but it's interesting to look at. As you look at those first 4 points, the annual index price of these types of meat based on a 2002-2004, putting the index at 100. So you can see there what's going on monthly in 2010, and if you roll up 2010 and say, where are we going to be on average for 2010, you can see it's going to be well above 2009, and on this data set will be the highest point on record. Pork prices are tied closely to grain prices, and as we've seen those grain prices increase, we're seeing the tide lift pork prices around the world, beef prices, and poultry prices. But it's not all grain driven. We're also seeing growing demand, tight production. The U.S. is in a very good situation to take advantage right now, even at high grain prices. Another major factor as we look around the world is China and Hong Kong. As I mentioned earlier, China and Hong Kong collectively imported 2 million tons, or they're on track this year, they'll import 1.7 million tons of pork and variety meats. Back in 2008, they imported over 2 million tons. And when we think of the sheer mass of volume, it's pretty staggering. Now, that's a very small percentage of their production, but it's still enough to get us excited, especially when we see pork prices going up in China. The blue line on this chart is the live hog price in China in yuan or renminbi per kilo, and you can see that increase on the right-hand side there, pushing up towards the 13, 14 renminbi per kilo. That's significant. When we look back at the blue ear disease in 2008, you can see the big surge in pork shipments into those countries, chasing that higher price. Now, you look at what's going on the last 3 months, you can see that the imports declined while prices went up. Doesn't quite make sense. But when you consider the huge subsidy programs that have been put on Chinese pork here in the last 2 years, they've been able to use intervention stocks and a variety of subsidy levels to try and hold a lid on it. Now, I think we're going to see these pork shipments going into Hong Kong and China increase here into year-end and into next year. I think there's some great opportunities there. Even in the face of big subsidies and huge support in China, the market's big enough that the imported pork will continue to grow. I mentioned grain prices. We put this data together just a month ago as we saw the corn price rallies and tried to understand better who does this hurt the most and who does it benefit. And I guess it doesn't really benefit anyone, but you look at where the pain is. You know, Japan, Korea, Mexico, these countries use a lot of grain for meat production. And this is beef, pork, and poultry production and total corn feed usage in the countries to calculate the pounds of corn per pounds of meat. And so if you look at those countries that use a lot of corn and then the little table to the right and look how dependent those countries are on imports. Japan, Korea import all of their corn. There's some real risk here to those countries in terms of their domestic production. They're going to have a difficult time importing corn to produce domestic meat. I was overseas this last week over in the Middle Eastern region and talking to corn importers over there. Their corn import landed price was almost $1.50 a bushel above the Omaha corn price. And so as you think about that and think, how are we competitive or who's going to be the most competitive, any country that's importing corn is going to have higher costs to produce meat. And so even in the U.S., as we feel the pain of these high grain costs, we are very competitive, and we probably get hurt the least in a global standpoint based on the grain prices. Europe has been just really feeling some heat over the grain prices. They're talking about production declines in the future. They've called a special meeting of the government to discuss what to do about pork production in the face of higher grain prices. And Europe is a major force in global pork trade. So we look at sow numbers here. This chart looks big. You know, as you look at it, you see the big bars and the big change. U.S. down 125,000 sows, and out at the other end, Brazil up 120,000. But these are USDA forecasts for 2011. But when you think about what that means, our production is roughly 5.8 million breeding sows, 125,000 is about 2%. And this is really somewhat of a shot in the dark to try and say what's 2011 going to be. But you can see the trend there. U.S. is going to see maybe a slight decline, the EU down a little bit. Now China, they call it down 100,000 sows. You think that U.S. number is insignificant. China has 49 million sows, or at least that's the estimate. So 100,000 sow decline in China is far less than what a margin of error would be on this forecast. And I wouldn't be surprised if we see China increase sows 200,000 or 300,000 head in 2011 going the other direction. But because that number is so big, any little minor variance will blow that green bar off the chart here on this graph. You can see slight increases around the world. Japan, Mexico. You know, I'm not really in agreement that we're going to see Mexico increase. If we look back to 2008 and see what happened when the corn price rallied then, we saw some big declines in Mexico numbers. I think we're going to continue to see that there. Shift over and look at the U.S. side of the equation. U.S. exports, currently 20% of our pork is being exported, 20% of our production. So that's 1 out of 5 hogs produced in the U.S. ending up overseas. And that's just the pork meat. If we look at variety meats, the variety meat number would be much, much higher. Roughly 75% of U.S. exports go to 4 countries. So what that means is almost 1 in 5 hogs in the U.S. ends up in 4 different countries overseas. Another major factor is the currency, the dollar index. And I hear that so often is, boy, this dollar just gets weaker, weaker, we're going to export more and more. But when you consider the U.S. dollar index, it's 66% European currency based. And so when I look at our key markets of Canada, Japan, China, Mexico, I always discount that dollar index move and say you've got to look at it on the basis of the markets that we export heavily into. And so what I've done here, I've created a pork index, that red line that goes along the bottom, and that isn't those currencies, but what that red line is, that's the U.S. dollar movement against a basket of those 6 currencies. Or I guess we've got the 5 there. China's pegged to the dollar, Hong Kong's pegged to the dollar roughly, Mexico, Canada, Japan. So if we look at the U.S. dollar in relationship to those 5 currencies, that's what that move is. So the recent decline in that red line means the U.S. dollar's declined roughly 5% in the last 3 months against those 5 currencies. And those 5 markets represent 75% of the pork that we're exporting today. And so it's easy to get emotional watching the dollar index move up and down, but in reality, for what it means to us in pork exports, it hasn't been quite as dramatic as we've seen. Now, obviously, we've benefited from the huge appreciation in the yen, the Australian dollar, some of these things we've been able to see trade flow better as our product's cheaper vis-a-vis those countries, vis-a-vis our competitors in those countries. But I would just caution you against using the dollar index as your temperature gauge on the dollar impact on pork trade. Next chart here just shows our exports monthly to the key markets. You can see there Japan, I've got 2 stars on those 2 months. Those were record high U.S. pork shipments to Japan. While we've seen Japan drop off the last 4 months, they're burning through some big inventories. Japan's a big inventory holder on pork. And I think the market still looks pretty good. We're looking about steady in Japan this year, which, yeah, we'd like to see growth into those markets, but when we look at what the loin prices do based on what we're sending to Japan and sending these big volumes, we have to feel pretty good about that. Year-to-date pork exports are up roughly 3%. That's probably a disappointment to the pork world because of the huge growth we've seen the last 4, 5, 6, actually out probably 10 years. 3% isn't quite as exciting as what we've experienced. But when you look at the long-term trend, it's a huge victory, and things look very good for the pork sector in 2010 and into 2011 based on trade. Our shipments to Mexico there are up 18% from a year ago. China, Hong Kong's down 4%, Canada up 8%. Korea we've seen decline, it's down 16%, but then again we've seen some big U.S. beef volumes going back into Korea. And if you look back at the data in 2003, when U.S. beef was banned from Korea, that was one of the biggest growth years we had in U.S. pork to Korea. So we're seeing a little bit of a correction as more beef goes into Korea. I don't think it'll be a big problem for us. Out of all these charts or all these countries here, I think what's most interesting is the other line, the dashed black line across there. Our shipments to the other markets are up 31% year to date. And as I've dug through and tried to pick through the pieces of the other markets, I can't really put my finger on any one market. But there's a whole raft of countries that are buying more U.S. pork. The bigger ones would be the Philippines, Taiwan, some of those countries. But it goes right down the list to Caribbean countries, a lot of smaller Asian countries. But all over the globe, we're shipping more volumes to a whole bunch of small countries. And I think that's indicative of how competitive we are and how tight supplies are globally. Now this next chart shows it maybe a little better. This shows U.S. pork exports to the traditional markets, the Japan, Canada, Mexico, Russia, China, Hong Kong. That's roughly 77% of the pork we export today. The all other markets, those lesser markets, is 23% today. That's a big shift from just 10 years ago when that was around 10 or 12%. We've almost doubled the market share into those lesser markets. I think this is a good thing. It helps us diversify away from heavy markets. You can see what happened to poultry in Russia the last couple of years. It's good that we can diversify into many markets and not be so dependent on one or two or four markets. I think this trend will continue as we continue to see growth in those other markets. Now I mentioned loin prices and the impact that Japan has on our loin prices. This chart here shows the blue line is U.S. loin prices in dollars per pound, and the green line is U.S. pork exports to Japan. Japan's a key buyer of loins, of picnics, of a wide variety of items, but I think this chart here is somewhat telling when you look through these monthly levels from 2008 out into current time, the decline we saw in pork shipments to Japan, and also the softness that we saw in loin prices. And then as we got into 2010 and saw those pork shipments really pick up to Japan and the increase in loin prices. I think it's important that we don't discount the impact that these markets have on our domestic cuts, especially when we see, like Steve just showed us, the weakness in the domestic demand for pork. I've got this chart here, and Steve showed this. This is it was a different variation of this, but this is the University of Missouri's pork demand indexes. And this is pork demand and hog demand laid side by side. Now, if you look at this, what's wrong with this picture? I was very confused as I looked at this graph, and I said, how can we possibly have pork demand just lagging for the last almost 20 years and see live hog prices or live hog demand increase significantly? And as I looked at that and tried to think through how that works, well, our pork demand, that's based on U.S. retail demand for pork, or U.S. retail and food service demand for pork. The hog price is just the overall demand for hogs, whether it's in the U.S. or out of the U.S. So what I did, I went ahead and threw exports on the graph. This next chart shows this is that same live hog demand index from the previous chart. On the left axis, on the right axis, is our U.S. pork exports in million pounds exported. And I think that's very telling on why we've been able to do what we've been able to do with live hogs and live hog prices here, especially the last 5 years. This would indicate that exports are a huge, huge factor in the live hog demand when we go back beyond U.S. retail. And so we can sit here and say we have weak performance in the U.S. economy for pork, but however, that global marketplace has driven significantly the value of the hogs here in the U.S. Moving on here, this is a chart just showing what we've done historically by country with our pork exports and forecasts for the 2010 year, which is just winding up, and also a 2011 forecast. This is our global AgriTrends forecast. We're looking at a 4.1% increase in 2011. Mainly with continued slight growth into Japan, good growth into Mexico. I think the high grain prices are going to continue to keep that Mexico market going. But looking back at 2003 at that red line for Mexico, we were shipping 350 million pounds. We're up over 1 billion pounds, and that's just 7 years. It's pretty impressive what's happened with the demand for U.S. pork into Mexico. Across the board, though, we're looking generally at growth. Russia's a little concerning to us, the attitude they've taken on self-sufficiency and production, and even though they came out with steady quotas, they've been continuing to delist and relist plants. I think they're going to be a difficult partner in 2011. Next chart, this is a couple months old. We put this together in July and August. It's tough to scrape up all this data around the globe, and we end up using a lot of emails back and forth to get it. But I think this is interesting. It correlates. We do this every 4 months, 6 months. But this is interesting how the shape is always the same. Every time we do this, the U.S., Canada are the cheapest hog prices in the world. And what this is, it's a U.S. dollars per hundredweight equivalent of hog carcass prices around the world. So if we take those prices during those 2 months, convert them all back to U.S. dollars per pound, that's where we lie. And I use this chart just because it really gives a clear indication of how incredibly competitive our North American hog production is. You can look there at even Brazil, Mexico. Those countries are significantly higher prices to produce hogs than we are. China, across Europe, all the way out to Russia and Japan. It's interesting that Russia has the second highest hog prices on the planet, held in place by plant delistings and import quotas and regulations. And Russia's fine with that because high prices drive higher production. And this recent venture or experiment they've had into self-sufficiency has just perpetuated those higher prices. Another way to look at global competitiveness is to look at our market share in the U.S. as an exporter as a percent of all meat exports. And I think it's interesting. Look at the broiler number. From 2000 to 2010, Brazil increased broiler exports significantly. Brazil became a huge broiler producer and exporter, and we lost market share. We've lost about 12% market share in the last 10 years in broilers. However, look at pork. We went from about 18% of global pork exports to where today we're about 34% of global pork exports. So that's an indication, a very clear indication. We've pushed someone else out of the market to get that market share. And it just tells you how truly competitive U.S. pork is in the global marketplace. Of course, beef, following the BSE, there's been somewhat of a recovery back to those pre-BSE levels. But the real story on this chart is U.S. pork and how much market share it's been able to capture out there. Shift over, look at some of the watch list items. First chart I've got is Mexico pork supplies, and this is USDA FAS's numbers. And you can see there what they're showing domestic production of pork at in Mexico and what imports are in Mexico. It's interesting. I can get whatever type of data I want from Japan. I can look at wholesale, retail. I can look at monthly slaughter. I know less about Mexico than I do about what's going on in Uzbekistan with pork. We cannot get good data out of Mexico. And I bring this chart up because I question significantly USDA's data out of Mexico. USDA continues to tell us that there's roughly 1 million sows in the Mexican herd. I know of a private consultant that was traveling in Mexico recently who said there are roughly 650,000 hogs, down from 1 million, or sows, down from 1 million just 2 or 3 years ago. I think we're missing something here. I think if you go back to 2007, 2008, that Mexico sow number declined significantly away from what our USDA estimates are. And I think that's what we're seeing here. I don't think it's a huge consumption growth down there. I think we're taking a big bite into their domestic production. And I think that's been driven by corn prices. The reason that's important is if that's happened, we're going to see more of that at these higher grain price levels today and into the future. Another major factor, the Russian situation. And here you can see what they've done with their poultry quotas, down from 1.2 million, they're down to 350,000 in 2011. They've basically shut the door on poultry imports. Surprisingly, they've left pork alone in 2011. For 6 months, they've been threatening that they're going to cut that pork quota as well. I think what's happened is with the high grain prices, they're seeing inflation in pork to a point that they're not real comfortable. And I think the only reason they left the pork quota alone in 2011 was that they are seeing that gauge go up. They don't want to run pork inflation any higher than it is today. Pork prices are very high in Russia. Production is enormously profitable over there, and they're attracting a lot of outside investment. A lot of European firms have moved in producing pork in Russia. It's a great money game right now. But the fact they left those quotas alone tells me that they're seeing some pretty hot pork inflation today. Another variable, just the current commodity inflation. If you want to do something interesting, go to Google and type in food prices. Take a look, and you can either do Google. What I'd do is go to Google News, type in food prices, and look over the last month at how many headlines there are. These are all fairly recent headlines, September, October, November. We've already went to the point of food riots. We've got concern out of Europe. We've got concern out of Asia. In a way, it's very reminiscent of summer of 2008. We're right back in that point. It's going to fire up, as Steve said, the food versus fuel debate. We're going to be taking a lot harder look at ethanol here in the future based on the tight supplies and high prices around the world. And finally, this UN FAO Global Food Price Index here, you can see what's going on. This is the same data set I showed you before, just where I broke apart the meat. But this is the FAO estimates. You can see there what's gone on in 2007, 2008 as we saw global commodities race off. That's when we had crude oil hit 140. It's when we had corn hit 750. The story was we're out of food. The world does not have enough food. And look at what we've done just over the last year. It wasn't quite as dramatic, but we are sure creeping that direction. And if you look at the change there on the right side, just the change from our 2-year lows, dairy's up 70%, oil's 53% on down. Meat prices are up 21% globally from 2-year lows. This is significant. This is going to get a lot of attention. I think the hope it holds for us as a trader, as countries see price inflation rise, they often have more of a tendency to relax import standards. And not all countries, I can't say that across the board, but we saw it in 2008 when grain prices went crazy. Even India, which is enormously protectionist, did a temporary reduction on import tariffs. And so as we see that high import inflation or price inflation, I think we may have a tendency to see access improve in small degrees around the world. So watch list items, we've talked about this, the Great Russian Experiment. I think we will see continued delistings, and I think they will continue to battle and work to try and get to that self-sufficiency number. Even maybe bigger than that's the Great China Experiment. We look at what they're proposing, and I think we'll see it probably within the next month, maybe 2 months. The Chinese government is going to release a plan outlining probably the biggest ag policy shift in the history of the world. They're proposing a major change in how pork is produced in China. They've got a plan where they seek to double pork production. They are looking at closing roughly 75% of all slaughterhouses in China, replacing them with large-scale industrialized processing centers near the city regions in China, near the population bases. I'm just getting bits and pieces of this now, but it's going to be a huge change in production. It's going to be big enough that I think the real factor will be the change in the demographic structure in China, because it's going to change and possibly displace millions and hundreds of millions of people if it goes forward the way they're planning. But anyway, something to keep an eye on. The great leap forward, I guess, so to speak. U.S. economy remains weak, likely prolonged. I don't see any light at the end of the tunnel. I'm not a U.S. macroeconomist, but even looking at Steve's demand charts, we may be seeing a little bit of an uptick in demand, but we're still in tough shape with unemployment and economic growth. Mexico trucking dispute. We have the carousel retaliation. It's added a 5% duty on U.S. pork to Mexico. This was a shot at the U.S. administration for not implementing the trucking regulations that we agreed to implement under NAFTA. So as long as we don't implement those, the Mexican government can go ahead and place duties upwards of $2 billion on U.S. goods going to Mexico. Now, Mexico's strategy with this is every year or so, they'll put those duties on different U.S. products to get different U.S. organizations banging on the door of the White House saying, fix the trucking issue. And this year it hit pork. Now, we take that as kind of a poke in the eye. However, it's important to realize that duty was almost 20%, and it was right down to the last hour, it ended up being a 5% duty. And that's painful and it's frustrating. But if you look, our ham prices the first 6 months of this year, the price that Mexico was paying for U.S. ham was almost 50% above a year ago. So we had a 50% price hike, and then we added a 5% trucking duty onto it. And we're still shipping roughly 20% more pork to Mexico than we did a year ago. Not a major issue, but it's something to keep an eye on. And next year, the options on the table are Mexico could go ahead and take that retaliation off and put it on beef or poultry or something else, or they could go ahead and raise that duty on U.S. pork, which would be a major impact. If they went ahead and put that to 20%, that would be something. That would be a game changer for the U.S. Pork sector, particularly in the ham world. And then high grain pain. We've talked about that and what that means around the globe. My bottom line is it hurts others probably more so than it hurts us. I think it's going to open the door to opportunities. We're in a weak dollar situation. We're very competitive with production, and we're probably going to have opportunities to expand our shipments and our presence around the globe.